All right. Let's start our lovely day, our lovely session in 3 minutes. All right. Oh man. Apologies. Oh, family. I just realized that everyone was looking at a dead screen. So apologies, but at least you were able to see my face for 3 minutes. Let's start. Hopefully everyone's having an amazing day. First things first. I can't just go straight into the markets. Let's see who is on. Let's give it about a minute or two. I know we got some last minute individuals. I just dropped the link inside the community. So while everybody gets on here, I want to make sure to just take a moment and make sure that everyone should have access to all of the amazing solutions that we have inside Elevated FX, right? So do me a favor, and when you get a chance, I want to make sure that before we get started, everyone knows where everything is located, right? So log into your back office.
Started Elevated probably about 5 months ago.
Bada boom, bada bing. Let's get in here. 1 second. All right. So first things first, I just want to make sure that everyone is set up properly, right? The first thing everyone should obviously have access to is our Discord community, as well as our success manual, right? This is literally an accountability partner all put together so you can maximize this experience and truly identify what's working and what's not working, right? Now, today we're going to be talking about the Pullback Pips Indicator. So I want to make sure that you guys go into your FX Mastery. And if you don't have your Pullback Pips Indicator, this is where you would come in and fill out that information to gain access. So all you have to do is come under here, me, Anthony, you'll see the foundation. You'll be able to tap into an array of amazing content that we have that introduces you, gets you right. And of course, our other educators have their playlist as well. Make sure you go through that. Amazing content. There's over 50 different modules in there to helping you maximize and learn and truly take this skill set to another level, right? So I want to make sure everyone should have access to your Pullback Pips Indicator, right? Which should look something like this, right? This is your Pullback Pips Indicator. To gain access, all you have to do is click on this link that says access to software. You click it, it's gonna take you to a Google form to fill out, and all you have to put in is your name and your TradingView username. Simple as that. Then when you go into your TradingView, all you have to do is go into your invite-only scripts, and you'll see it, elevated pullback pips. Since I already have it, I don't need to click it. Let's rock and roll, right? So I want to take this time and first let me just delete everything, right? Because today's Technical Thursday. Today we're going to talk about the markets, right? But I want to make sure to talk about the markets that you're interested in. So let's start off with gold, because these are the two charts I've been looking at today. Right now, I want you guys to do me a favor and drop the charts that you're looking at. Which currency pairs are you guys looking at right now this week, right? Now, as you guys drop some pairs, I'm going to just talk about this setup on gold that was given inside our Trade Talk community, right? If you're inside the Discord, best believe we're going to be dropping some gems. So first things first, when it comes to this gold, this was actually a setup. As crazy as it sounds, this wick was actually our entry on this trade that went for over 100 pips. So risking, only 25, it was definitely a good R to R. But I want to take a moment and help you guys recognize what I was looking at and why I was looking for this specific move on gold, right? So I'm just going to remove everything, and everyone should be familiar with our Pullback Pips Indicator. If you're not, let's take a moment and let's just review it. Let this bad boy load up. All right. So the first thing we're going to do is when we're trading on our 30-minute, we're usually going to use a time frame higher. All right. So whenever you're trading any Forex pairs, you're usually going to be entering off the 15-minute. I know some people enter off of the 5 at times, right? So make sure that you're using your pullback bias, which is the red and the green backgrounds, on your higher time frames, your 30-minute, your hour, and your 2-hour, right? Those are the 3 time frames I would recommend. So all you have to do is go into your settings, and you'll be able to identify the background color, right? You have it on your 30-minute, your 1 hour, and your 2 hours. Simple. Now, the next thing you're going to notice about this indicator is you have these levels of structure that are identified, because that's very important in being able to identify where is the market at, right? So now that you have your bias, your background already on these higher time frames, this allows you now to go into your entry time frame and find the opportunities you're looking for, right? Now, let's just do a quick run on this back play so you guys can identify why it is that I like that special entry spot. Because if you notice, we were already in a bullish market, right? The green represents we're in a bullish market. We're identifying that we're creating these highs, which is great. And if you guys have been following, all last week I was talking about when we were all the way at 1770. I'm talking about all the way down here to go bullish on gold, right? So it's good to see that when you're looking at this market, you have levels or areas of interest that you're looking to get in. So in this scenario, if we're looking to get in on gold, this would not be the best time to get in for the buy, right? Because you can see that it's at a rejection area of structure. In fact, if you're buying something, you want to buy it at the lowest price, your discounted price, right? Which is going to resonate with this area in price that we have. So that's the great thing that you're going to be able to start identifying. If you're bullish, stop buying the market at these highs. Now start identifying where can the market come attacking these lows so I can take it up. And what that means is if I have an area of interest that I'm looking to get in, right? if I have an area of target where I could take this market to, we have structure. You have yourself a setup. So it's just a matter of time before this bad boy comes in, gives us that wick. You saw that wick? That was exactly what we needed. Let me show you why. Psychologically, I want you to see what truly happened. If you remember, there was a lot of what structure right there. Here, let me just do a quick replay so you guys can see. There was structure at this level. And what these structures are helping you identify is, yes, these are where people are placing their stop losses slightly below. So when you have the ordinary retail trader coming in, they're coming in placing their stops at these lows of price. So if gold wants to take these highs, don't you think it will want to take out these players before that? Which allows you to see that when this market did give us that opportunity, boom, it swiped all of those players. We came in, right? And we're able to push this bad boy up into target one for about 100 pips, right? So it's just a matter of being able to just be patient with your setups and finding these opportunities in the market. This was our setup for 100 pips, which hit our target. Perfect play, right? So what's next? What's next with gold? Now, for starters, we noticed we created this long wick, which is going to be a lot of hesitation in the price. We notice we have that structure level right here that we're interested in. Now, me personally, I do believe it'll look to target that 1810 area. But before that, it needs to come out and possibly take out some lows, right? If you think about it, we got some players who would have came in at this wick, maybe placed their stop, making it risk-free, right? Who knows what's at this area? We also see that there's this level of price. Me personally, I'd rather see it come to 1790 before 1810, right? So looking at gold, we can do just some very simple technical plays. Let's grab our fibs. And this is going to help us identify an area. This 707 is a nice fake out area. A nice, hey, let me come in and tap and turn around. So me personally, if you notice, we're still bullish. It's just a matter of now we're looking to buy it where? At these lower points to still now target these highs. Do I think, gold will come down, drop 80 pips? Well, actually, right now it's at 17. Well, it's right at 1798. So it's only about 50 pips. That's not bad. I could definitely see gold wanting to do that, and we'll take it. Ready? Structure to structure to structure, right? So I'm looking at only one spot, one hot spot of rejection, which is right here where these zones are, because we know we have that structure. That's the green line, right? We know it's an area of a fib retracement, right? So now all of those confluences can give us an opportunity to minimize our risk. And you know what we're going to do with that? Maximize the profit, level to level to level, right? So this is my setup on gold and what I'm potentially looking for it to do. The next best thing to identify, of course, is seeing what the dollar is doing, because that will have some move or leeway on it. Checking out that DXY. Me personally, check out this area of reference, right? I'm going to just drop this screenshot. Let me just drop this screenshot. All right, let's see what charts you guys mentioned. You guys mentioned USD JPY. All right. Let's look at USD JPY. Give me 1 second. My bad. You see, I don't want to talk about US 30 today, but ooh, it's in a sweet spot. All right. Let me just here. Let's just talk a little bit of US 30 today. Just a little bit, just because I was already looking at it and it's kind of playing out. So what's happening? Whenever you're looking at your charts on a technical level, you always want to start off on your 2-hour time frame, your bigger time frames, right? Now, one of the key things you always are going to deal with is structure. What is structure? Well, already, if you're familiar with what structure is, you already know, like I could identify it real quick. Boop, boop, right? And here, let me just show you real quick. You see on the hour, boop, 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 they're identified. If I grab my pullback pips indicator, right? Let's just worry about structure right now. You're going to notice those lines that I just identified, guess what? They're already identified for us, right? So what this helps us identify is the market has not confirmed that it's resistance or supportive yet. In fact, before that market was, you see this structure? It was confirmed that it wanted to reject. You see this level of structure? It confirmed that it wanted to be supportive, right? So what this allows us to do is when you're looking at the market on a structure level on the 1 hour, the 2 hour, you have targets, right? Right? And the thing is, I don't want to talk too much US 30 because the main thing is you got to make sure that you're trading it with the right volume and account size, right? But on a structural level, we still have these highs we could target, and we clearly have plenty of lows, right? Last time we got a crazy dump like that was during what? COVID, right? You got to realize US 30 is based off of the strength of these stocks, and there's more to it. It's not just, oh, we're going up and down. You need to just be patient and strategic, right? So when you have structure identified on the 1 hour and your 2 hour, this now allows you to see where the market can react off of and where you could take the market to. All right. So looking at US 30, what did it recently do? This move that it created was recently based off of this reaction, right? So the most recent play you see is bullish. So whenever you see a play like this, you're looking at your technicals. You're looking to identify what is the market doing. It's going higher. It just broke that. We're pulling back. This is where we're getting in to take this market up. What you're going to notice is US 30 at times will find some plays that will like to take out lows. And what I mean by that is if you're able to identify where structure is, right? Let me just show you some past examples. You got to be precise with US 30. If it's not an entry, it's not an entry. But be able to realize that you see where all of this wicks and rejections are. Where do you think you probably would have been able to get in? On this play where the market took that swipe. Not only that, I probably would have gotten in and already probably gotten out right there. Boom. Because it's easily going to look to target these interest areas, right? So I sent out an analysis on US 30 today because I wanted it to actually come in and I wanted it to take out these lows, right? And I'm just going to show you guys the setup. You can go in the Discord, but it actually did exactly what I wanted it to do, right? In fact, my target was 100 points. It went for almost double that, right? And my setup was something like this, right? So if you notice, you know, we didn't get the sweep, but best believe the bias on the bullish setup was there. Now, looking at that market right now, what does that really help you identify right now, currently, what's happening? Well, you already should have been out of this market at your hit, right? Because if you notice, it's coming down, but it's coming down what? Ugly, choppy, you know? So what that allows me to identify is where is the market structure at that's relevant in price, especially with something like US 30, where you see there's a lot of structured price right here. That's the play. I'm asking myself, if I already know or have this area of reference that I'm looking at, right? Let's go into the 30, right? Right here. And if you notice, there's wicks, right? You see the wicks. You see wicks here, wicks here, wicks here, wicks here. This is going to be an interest spot. If we can get a nice sweep into this market, into this price, it'll be great. Because you notice, we still haven't reacted off of the structure, right? Now, I'm going to say this a little slower because every entry, every move is based off of a reaction. When the market came and it reacted to the downside, you were bearish. When the market came and it reacted bullish, now you're bullish. So far, there has not been any reaction except for the bullish reactions. The bullish move, the bullish move. Look at this market candle, so aggressive. So clearly, you know that the market's just pulling back and looking to target the reaction that it last had. And if it doesn't, and it decides to break lower, we still know we still have this level of reaction to attack to. Right now, I'm trying to keep my risk minimal because I know I can maximize my profit. When I say maximize my profit, I'm trying to do it and take it into 2 levels. All right? You're always going to want to take it into your zones, but as you go into your zones, you'll have your levels of structure, right? So if you notice, with this current setup that I'm looking at with US 30, I'm looking for it to come here, react here, bullish push to the upside, right? And I'll be able to take that type of setup because look at the risk that you're going to be able to put on it, right? And easily already pushing it into your first target is going to hit that 3-to-1, right? As it makes that move, you might take some profits, wait for the pullback, but best believe continue it because it's looking to make this move to the upside. All right. I'm just going to let you guys in on the two keys that I'm looking at with gold and US30. Now let's see what you guys are looking at, right? So someone mentioned USD JPY. USD JPY, right? So utilizing our pullback pips indicator, whenever we're tapping into any Forex pairs, I like to trade it on my 15, my 30 minute, right? Because I know I can have the background on my 1 hour and my 2 hour, right? So if you notice, looking at USD JPY, we have been bearish. We have been bearish for a while, which allowed you to catch these pullbacks. And if anything, you should be pushing this bad boy down. And looking at this USD JPY, here, let's start off on the bigger time frames as we mentioned. What's the first thing that you're starting to do? On your 2 hour, on your 4 hour, you want to identify structure, right? You want to identify where the market can go to, where it could push from, where it can react off of. Those are always questions you need to be able to see and identify. So like right now, we got USD JPY. We could push it into these levels, but we know the last moment it was there, it was supportive. So we need to realize if it does reach these levels, it can pull back. But once it breaks here, we possibly have a lot of flow to the downside, right? Now, looking at a setup like this that we're bearish on, your opportunity came in so many times, right? Whether if it was off of this first momentum and catching the pullback, right? If you notice, it literally pulled back into our interest area and did what? Dropped. Right there, dropped. So when the market created this new low, this pullback, I like it. It's interesting because right now, the only question I have is, since I'm bearish, where can I get in to maximize my profit? All right. So for example, if I'm going to grab my fibs, I know that I got to have a sweet spot entry within my box area. And the great thing is that there's what? There's structure, there's rejection there. Now, if you notice, we did get a nice wick. So that's the question. Is that the reaction that we're looking for to take these lows? Seeing that we just broke this level, will the market possibly pull back? Right? Those are two things you got to ask yourself. If it doesn't want to pull back into this whole zone reference that we have, we still got to enter at some type of pullback that justifies our entry and our exit, right? You're always going to notice I want to place my stop loss above some structures, right? And the reason being is like, if the market already reacted off of here, it doesn't need to go any higher. All right. If the market wants to pull back and take me out, okay, take me out. But realize this reaction area is still valid until it breaks through, right? So it could easily create a wick here and I could just find a better entry and still have my targets. And guess what? I was able to minimize. So now instead of it just being a regular 3-to-1, it's almost a 6-to-1, right? A lot of people don't understand the aspect of just getting out if you're wrong, right? I've gone through it so many times where it's like you're holding on to the wrong trade. So what you want to be able to do is get rid of it. Get rid of it to clear your mind. Get rid of it to look at another opportunity, see if you got that confluence. So those are the two entry spots I look for when it comes to this USD JPY. I do want to see it continue to be bearish. Confirm the DXY on it, confirm the yen, see what it's doing. But pullback pips is showing that it's been bearish, and it sure has been bearish for some time. So it looks good. I like it. I'm actually going to add that one in here. What else? What else? What else is everyone looking at? Oh, man, this is the time to ask questions. This is the time to drop those currency pairs. Me personally, let me see what's happening with some GBPs. Oh, I like it. I like this. All right, so let's look at this chart. This one is Gbp Usd. All right. Starting off on our 4-hour time frame, we notice we have plenty of space to the upside, plenty of space to the downside. But one of the most recent things that happened, and I'm going to zoom in so you guys can see, is the market really came to this level of structure and decided to react off of it. That's the story right there. That was the impact when the market came into that level of price. And we could zoom in and you could probably see what happened here. Isn't this interesting? Look at what's so interesting. The market, you see that wick? That wick is actually lower than that candle. It took those people out. It said, you know what? Boom, let me create a quick low swipe and now move up. All right. And since it has done that, we already know the market created a reaction. So it has no purpose being under this level of price. All right. But we don't need a stop loss that far. I'm just showing you what we're doing. We're identifying structure so you know what's happened and where you could take it to. The two main key areas we're going to be dealing with is this area and that area for now, right? Until it breaks or decides to reject. Now, based off the last recent push, we had a lot of what? Momentum. Looking at this GU, we got this level of rejection we could reach, but we definitely have to reach this level of price. If I want to buy it, right? Because pullback pips is helping us identify we're buying. So since I'm looking to buy this market, my question is, where can I get in? All right, where can I get in? Where can I get in? Look at that. That zone was actually pretty perfect. 38.2 to 61.8. That's the sweet spot I want to get in on. I want to see this market pull back, because if it can easily pull back, it allows me to push into these targets, right? That's a 70 pip push. And look, our stop loss, look where it is. It's under this whole zone of reference. So the more that it stays in the zone, but still is pulling back, the more opportunity you're minimizing risk to maximize your profit, right? So this GU, this pullback is nothing. Let it pull back. You know, two areas of interest I got is right in there. All right. So if it could literally come in, I don't want it all the way. You know, it might pull back a little bit more aggressively. That's why, as long as you have your stop loss below that structure, below that zone, you're fine. That's actually pretty juicy with GBP USD, right? All right. Those are two good juicy charts. What else is everybody looking at? Aud Jpy. Let's check that one out. Aud Jpy. All right. So this one's interesting. Okay, let's look at it. This is interesting. Why is that? Well, we recently turned bullish, but we need to realize two things. And right now with AUD JPY, we need to be able to identify who's in charge. Is it the AUD? Is it the JPY? Right? Because when it looks for UJ, we're seeing, hey, it could potentially possibly pull back into this rejection area and keep dropping, right? Just looking at this market right now, we've noticed we've had some rejection, took out some swipes and created an impulse. So my question that I have with AJ right now is, before anything, why did it break so aggressively? All of this support, right? Because if it broke all of that support aggressively, that's just an area for me to reference to short it, right? Until we get the break of this momentum back up, we can't identify that it's bullish, because right now we have so much rejection that's bearish. So with pullback pips, let's see, right now this change was because of this wick. But I know for a fact, once we do become bearish, if that's the case, it'll really switch real soon. But I'm just showing you what I'd look for in this setup is, how can we minimize? So let's see something real quick. The 1 hour, let's see the 2 hours still bearish. That's not too bad. The 1 hour is going to switch over soon. But if we're bearish, how could I get in to minimize? If you notice, if you were bearish, your market has no purpose breaking above this reference of rejection. If I was bearish and I'm looking at AUDJPY, I'm probably looking to get in, if anything, right here. All right. And the reason being is because I'd rather get in there, because I know I could minimize my risk for 15 pips. If I'm wrong, I'm wrong. But best believe if I'm right, I easily just turn that into a 4 to 6, right? I'm also identifying I'd rather enter here because if you notice, there's all of this wick and rejection. Look at all of that. That's hesitation in price. So when there's hesitation, best get your best price. And the next thing that I need to confirm is AUD USD, because I know my AUD is going to have an influence over, right? You're gonna have that impact with your AUD and your JPY. So that's why I was saying AUD JPY is a little shaky at the moment. That's why you need to really make sure you're minimizing any setup, because AU is chilling right now, right? You see that it's been retracing. It would be nice if it just wants to continue retracing, right? Because if that's the case, you might get some luck on that AJ. But you need to be a little patient, just because there has been some nice bullish pushes on this setup, right? Like literally just imagine catching all of that bullish wave, right? And this is a easy scenario that you're able to see. Like, for example, if you ever get a moment that you get the market telling you you're bearish, the first thing you need to be able to identify is, where are my reference areas? Because through that, you'll have the realization that once the market breaks that area, right, that rejection is no longer going to be rejection, right? I'd rather be wrong, minimize my wrong, so I could do what? Maximize my win. By being able to identify that, look, you have so much more opportunity for the win, right? That's what a lot of people need to be able to understand with these systems and these tools, that they're all here to help you guys win and simplify. But best thing you got to do is make sure you're using proper risk. So AJ is not too shabby. I just want to make sure that it doesn't get too aggressively pushed, because if AU wants to do that, be careful. Let's see, UJ is pulling back too. So you already know AJ is going to pull back on both scenarios. So the pullback would be great. The pullback would be great to really minimize. That's the only scenario I'll play with AJ. It doesn't look bad though. I like it. I definitely like that one. All right, fam. Let me know what other pairs everyone's looking at. So far, we'll do a quick review. The only opportunity I'm looking at when it comes to gold, here, gold is a different beast. I'm looking at these swipes of these lows of these wicks, right? I do believe you could get an easy 72 pip pullback, but that would be my only interest. Other than that, I do like it pushing up higher into this whole level of price. This is interesting. If you could catch that, it'll be a nice 30. You could do 30 pips, make it a nice 6 to 1, 6.5 to 1. Yeah, that's nice. Not bad at all. As it's pulling back, you could be patient enough to get in after the wick of this sweep, so you could take it back up, right? That's how I look at it. I set an alert at this level of price, so when the market hits, I'm alerted, I pull it up, I'm identifying the rejection there, right? Because if it continues going low, you already know not to get in, but the rejection will only be there to take it on up. Other than that, let this bad boy marinate. You already knew the first entry we had was right here at this wick and went straight for 100 pips. That's the type of entries we want to catch. Minimal risk, maximize profit. USD JPY, we're bearish on it. Be a little patient. If we can catch a pullback, we already know that we're looking for this rejection zone area right here. So wherever we can get in on that rejection, we'll be able to minimize that risk to maximize and push it into our targets. As long as your setups are 3 to 1, right? I mean, at least above 3, then you're good. GU, if you notice, we're definitely targeting some nice levels of structure. We had a lot of momentum, boom. So the next thing I want to see is how can we pull back so I can get a better entry to take it up into these levels of price. That right there is a solid 3.5. You can maybe even catch 15 pips of the stop loss to even it out at like a 4 if you can catch a better pullback. So the key is pulling back into this rejection area, making sure that my stop loss is under this price where the market hasn't been, so I could take it up into some nice targets. And then we looked at AJ. Now, AJ at the moment, I would probably wait on it just because we did get this transition in price. So what I would look at, and this is what's going to help me depict how AJ moves, is this zone, this area. This is where my rejection has to be, not up here, right? Because as it breaks through here, this is no longer going to be rejection, right? This is now going to leverage as support. So we do have some structured targets to the upside. That's why I'm saying, if you know how to cut your loss, we're looking for a setup with a nice 15 pip stop loss going for 4 to 1, right? But if that market decides to make its move aggressively, you already know that rejection area is no longer going to be rejection. You'll find your opportunity now for your bullish swipe entering into your target levels, right? If you're able to minimize your loss, maximize your profit, staying consistent that the R to R is always above 3, you're going to realize you're going to stay more consistent and profitable in this market, right? So right now, what I'm looking for is only this rejection at this zone. If it breaks through, then we already know we can take it back on the pullback, right? The reason why we're a little shaky with AJ at the moment is, yes, on the 2-hour, we're bearish, but you got to realize AU is moving to the upside and UJ is recently been bearish. So they're both of them are going to impact that AUD JPY. If anybody has any other currency pairs that you're looking at, right now would be the best time to drop them in the comments. And then we had US 30, right? We talked a little bit about this one. We went a little deeper in this one, a little deeper into the technicals of market and just some psychological manipulation. But yeah, I'm looking for US 30 to possibly take out these wicks of price. If we can get some play there, that's going to be where I'm looking for my supportive push to take this market up into price. This one's actually pretty golden. When it comes to your pullback pips indicator on US 30, you got to realize with this market, I'm usually entering on my smaller time frames, my 5 and my 15 minute, because it moves so much. You know, points and pips are not the same. Seriously. So when you're using US 30, I'm going to give you guys a gem. I want you to use your pullback pips on your 30 minute, right? When you're able to do that, you're gonna thank me later. And the reason being is because most of the time when you're getting in on US 30, you're getting in, you know, for a couple points. And the reason being is this right here, this setup that I gave, that's not 100 pips. This is 1,000 pips. So just some sauce. Check that out whenever you get the chance. I'm looking for my sweep of rejection, my sweep right here to take out those lows and push that market up into my target levels. The great thing about this indicator is you always have a reference of where the market's going to react off of, right? And that's how you're able to really take care of this US 30, because think about this. If you can get in here, right? And you know that your stop loss has no business being down here, you could minimize that to a 20, 30 point stop, right? And your target, look, target 1 is boom, easily already a 4.5 to 1, right? So you realize when you're trading pairs like US 30, these type of setups are going to come around that you're getting in and out of the market, because best believe if you would have gotten out in there, look, that bad boy goes, right? Let me just show you guys a quick play-by-play of some plays. And then if no one drops any pairs, I guess we're good for tonight. But let's look at this real quick. Right? If you already know that you're making this move into price, this is a good example. Catching this first wave, boom, right? You notice that this market took out these lows. So if you were looking to come in, you could have easily looked. That bad boy already moved 60 points. If your risk was 20 points, that's already a 3 to 1 setup, right? So it's always good to be able to use these levels and identify, well, if I'm getting in on a trade setup, where am I able to put my risk so I could at least know that my targets are going to make sense on the trade, right? So by being able to do opportunities like that, you'll catch, you know, that sweep of price, right? Not only that, but, oh, I'm going a little too fast. Slow down there. I'm not sure if you saw it, but it literally pushed into the first level of structure, which would have been boom. If you had a 30, it would have been a 2-to-1. If you had a 20 pip stop, boom, you would have been at a 3-to-1. Do the same thing again. Boom. And what you're realizing is these plays that you're catching hundreds of pips on is really just simple moves to maximize. So pullback pips with some structure on top of that, that's the icing on the cake. Fast forward, what am I looking at? I'm looking at this market to continue up into these levels of price. If you notice, it's faking everybody out right now, right? It's taking out these lows and saying, hey, hey, hey. Hey, hey, hey. Look, it just did it right now. Hey, hey, hey. But best believe there's only one spot I'm looking to get in right here. Why? Because it all comes down to R to R whenever you're trading. If I get in here, my structure is right there. I got to place my stop loss below it. Does that R to R make sense? It's 1.4. No, it does not. But best believe if you come in at this entry, you minimize, you maximize, and best believe your R to R would be a lot better, right? So those were the pairs we looked at for today. Let's see what other pairs. Cad Chf. Let's check that out. Cad Chf. That one's not bad. That one's not bad. Now, looking at Cad Chf, let's go to our pullback pips. This is a Forex pair, so easily make sure you're either on your 30, your hour, or your 2-hour, right? What do you see? We've been bearish, right? So let's just take a moment. Let's go to the hour real fast because this one's been a little choppy. But look, let's see. Cad CHF, man. A lot of those CHF pairs, they don't move as much, you know? Like, just imagine this pair literally was dealing in so much consolidation for almost an entire day, right? You don't want to be stuck in moments of just stuck consolidation where markets are just a little choppy. And as you can see, this was very choppy, you know? So what I would do is always, when you're looking at the market, you just want to reference, where is my structure? Where is the market opportunity so I can identify it, right? The only opportunity I see with Cad CHF is if I'm selling it, I need to get in up top. I need to get in at these opportunities to minimize. Trying to enter right now, it's at a supportive structure. No bueno. This bad boy could easily pull into this level of price. Now, personally, the only thing that I do like is that it broke all of that support, right? So at least if I am looking at some shorting, I'll be able to see and identify some targets, but I really got to keep it minimal, right? Something like that would be the type of play that I'm looking for. You know, let me go to the 1 hour real fast. We do have some nice targets on the downside that we could push into, but my first question is, where am I going to see my reaction, right? If this was my reaction, this level, this wick, this rejection, that means the market has no business being up there, right? So if the market has no business being up there, the next thing you got to have is you have your targets, you have your reference to reject, right, for stop loss purposes. So now my only question is, where can I get in on so I can maximize that run? A lot of the times people bring out your fibs and that your area is going to be between that 382 and 618. If you notice, you see where that 618 is, that's the sweet spot. If it wants to fake, it'll hit the 707, and that's why I have my stop loss slightly above that. I'll happily do, 10, 15 pips because my R to R is going to make sense, right? So I do like the bearish push on CAD Swiss. What I would confirm is, what is my CAD doing and what is my Swiss doing and when it's doing it. A lot of the times when you're dealing with choppy markets, you need to make sure to take it from session to session, letting know who's in charge, right? The most recent move we had on Cad Swiss was this bearish push to the downside. So if we're reacting off of that, best believe we're coming in on a pullback and taking it low, making sure that the R to R is above 3. All right, so those are definitely going to be some nice plays, but make sure whenever you're looking at your charts, you're always identifying an area of interest that you want to get in, a place that you can reference where to get out, and then everything else in between is making sure that the R to R makes sense, right? And being patient, right? Don't get in right now when it has time to pull back, right? Identify that there's specific times each and every market should be moving and functioning and grooving, right? So be patient, set those alerts, and I will see you guys on the next one, family. Let me just double check. I'm trying to get in at 74,177. 74,177. That's the sweet spot entry right there. Yeah, 74,177, right? That would be around here. That's actually right. That's right. That's right around my alley. I like it, right? Because if you're having that 71,74177, your stop loss definitely keep it minimal. Keep that bad boy at like 15 pips and you'll be golden. It has no business breaking high. The only problem you're going to face is if it does break high, realize that it's going to want to target these levels of structure. So don't hold the trade. Cut the trade, right? Because best believe if it does come up here, it'll probably turn green. I'll come in on the buy. And by the time you're over here, you're rushing the setup, you could have already pushed it up to the upside 50 pips, you know, with a 10 pip stop loss because it's under the structure. You know what I'm saying? Be able to identify where your opportunity lies to minimize, because best believe you will always, I guarantee you, you will always find a place to maximize your run, right? And your targets. So the only time I'm looking for this is once it breaks. Other than that, we're on this bearish setup for sure. Hopefully that helped you understand how to utilize these systems and tools, you know, and put them together. Some charts are going to look good. Some of them aren't going to look as good. So make sure you're trading and confirming the ones that look good, right? So I appreciate everybody, family, and have an amazing night. Take care.